We've got Schneider Foreign Exchange's Stephen Gallo here with us now, and Professor Moorad Choudhry from the London Metropolitan University. Moorad, if I could start with you. Looking at what's happening with the euro right now, it does seem to have found a little bit of traction. The reasons for this?
Markets being volatile as they are, there's always some upside rebound when you get some worry story, and that's what's happened. I would say it's trading in its current ranges. It got supported at that 121 level against the dollar. It's rebounded back. I think the market is waking up to the fact that the structural problems of the euro, its governance problems, if you like, are quite deep and need a lot of adjustment. And so we will continue to see this pressure, downward pressure on the euro for the rest of this year.
And you agree with that, Stephen?
I mean, I agree. The trend is clear in the euro-dollar now. What I would say is I think one of the main things that is supporting the euro is that you have a number of corporations, large corporations in the eurozone. They're buying their euros forward 6 months, 3 months, 6 months, maybe even 1 year. So, it's adding some support. But I think it is probably a matter of time before there's another excuse to push it lower. There could be a number of fundamental drivers. We could get more indications that central banks are moving away from the euro. We could come to a Greek restructuring. And a Greek restructuring is going to take a lot of political effort, which we know the Europeans are particularly bad at, coming together for political reasons. So, yes, I do believe it probably will trough at lower levels versus the dollar.
How significant did you think it was that China was talking about not selling the treasuries in Europe?
I think they had to make a statement because they don't want to be seen to be sort of acting hastily or being bounced into a movement. We have to remember, with sovereign wealth funds, they take long-term as well as medium and short-term decisions, and obviously, they will be rebalancing their portfolios as a matter of course, irrespective of market conditions at all times. They hold the vast bulk of their foreign exchange reserves in dollar assets. Obviously, while the dollar has been seen as weak, then they want to rebalance some of it. And of course, looking forward 10 or 20 years, there's the whole issue of whether the dollar should be retained as a reserve currency. So during this process, they will rebalance out of euro assets. But I think they made that statement because they didn't want to be seen as reacting in any sort of negative or positive way. They're just saying, look, we manage our portfolios. At some point, during all points, we will have X% invested in euro assets, and that will change. It's not, I think long term, it probably would do them good to rebalance into more euro assets, but they're not going to be doing that while they see the current troubles in the eurozone.
Well, indeed, while the current troubles are here, we don't even know if there will be a euro for sure. Surely there isn't much point in looking at it very long term, is there?
I think structurally, foreign official institutions, myself, I think there really isn't any concern that the euro won't survive. I think it's almost to a degree unthinkable. The question is, how long will it take Europe to get through all of these issues, to restructure Greece's debt, to restructure the economies of the periphery of the eurozone? It will take a very long time, and I think in the process there will be credibility issues, there will be weak growth issues that will weigh on the euro. But the one thing that you can be, I think, positive about from a structural standpoint is that the eurozone is further ahead in addressing its problems than a number of other key. We've heard no calls from Washington to cut the deficit in the United States. In the United Kingdom, only slim adjustments are being made for 2010 on the part of the Cameron government and the coalition government. So,
well, let's. I mean, just before I'd like to talk to you about sterling, but before that, are we looking at euro parity with the dollar? I
don't think it's justifiable. Catastrophically, if Europe makes more mistakes, we could get there, and then they will probably have to intervene. But it's not justifiable. 130 to 135 is our idea of fair value for euro dollar, based on the dollar's own flaws.
Okay.
If we address the whole philosophical issue of the euro, then it goes beyond technical and supply and demand and market size factors. If the eurozone doesn't address its structural, well, the factors that make it structurally unsustainable, then it will be hitting dollar parity. I would suggest that if things stay as they are now, we've had this 3-year bailout plan, but if there's no changes to the actual structure of the economies of the southern eurozone, they carry on with the welfare budget, they carry on without addressing the aging population, they carry on without addressing their fundamentally low competitiveness and productivity, then the euro will not only hit parity with the dollar next year, it will actually trade through it. So it's actually, the ball is in their court. The eurozone governments have to realise that they've been given some breathing space here because of this bailout plan announcement, and then they have to make the changes to their economies, make them more competitive, make the supply side reforms in the labour market that will help them. If they don't, then they're in the trouble.
Europe will emerge stronger from this, not weaker, over the longer run.
Moorad, Stephen, thank you very much indeed.
Thank you.